everyone. It's great to be back. I'm here to make taxes less stressful and more rewarding. Let's get into discussing entrepreneurship in greater detail. And for those that are just curious or needing the information, this segment is for you. Entrepreneurship allows you a lot of expenses. And with everything that we have going on, it's important for me to share with you those types of write-offs that are available to you. I want to discuss in greater detail particular careers. And for example, I can give you information about performing arts. So when I say performing arts, I mean dancers, entertainers, those who work and have cash only at the end of the day. Specifically, the buildings that you work in regularly allows you the opportunity to make a base salary, which is minimal. Maybe like $3.66 an hour or something, $3.66 an hour. But when you get that W-2, you have the option of claiming the tips that you earned daily as you clock yourself. And it's very similar to waitressing, right? So when you claim the money that you made, you count your money at the end of the day, it's important for you to report the proceeds that you received. Particular write-offs for those individuals are things like beautician needs. If there's a house mom that you pay out at the end of the day, paying her. And we briefly discussed in our first segment a receipt book. I brought one here with me today to give you an idea of what I'm discussing. As you count that money, you're going to use your receipt book, and I use the template with no name. I put the date, no name, no amount, just to fill in the empties so that you understood how you're recording this for yourself. If they do not have you at a base rate, it's important for you to do this step. It's important for you to take after you fill this out, if you're paying someone for a good or a service, you're giving them the top portion, and the portion that you're writing on, you keep for yourself. This is something that you would take to your tax preparer, and they will add up, total it up, do the bookkeeping for you. An important note for you while you're doing this is to make sure it's a pamphlet, right? So you're making sure that you're putting this in between the empty, right? So that you're not writing through the whole book. You're just writing on the sheet that you're working, okay? Dinners, business dinners are eligible and write-offable. Meals are 100% to 80% redeemable as an expense on your tax return. And with everything going on, it's important for me to give you a resource while I have you for the Food Initiative Program. There are a lot of programs available for those who are in need of food initiatives. Two examples is Forgotten Harvest. You can Google them, or ask Siri, ask your intelligence device to give you the headquarters and the days that they are giving away food. The Shrine of the Black Madonna gives away food weekly. Those are two food initiatives. However, when you work in an industry where you are paying for your food as an expense, it's able for you to write them off. Main things for dancers they write off are beautician expenses and traveling expenses if they're doing a special appearance for a bachelorette party or a bachelor party. Let's get into landscaping. Landscaping is very lucrative, and most people don't consider it a entrepreneurship when it is. If you are beautifying commercial and residential properties, it's important for you to write off the garden tools that you use, the lawnmowers, etc. You can write off your lunch for the day, vehicles that you use to get the tools to the location, along with materials and supplies. I'm going to go further in depth with you about claimable credits, the things that are you're able to write off and the things that you are not. There are a couple of schedules attached to the 1040. The Schedule 1 allows you to write off things such as alimony if you are recently divorced, and to write off unemployment proceeds is on that Schedule 1. Punitive damages for lawsuit income is on that Schedule 1. It is line 18Z. It gives you the option to write in what this amount is that you're writing off. So you are writing off medical expenses, or out-of-pocket expenses. You are not considering certain portions of the punitive damages. Now, keep in mind that when you file this tax return and the tax preparer gives you that amount, once you add it, lawsuit income, your refund is drastically increased. The tax preparer is going to give you an estimated amount. Once they see that information in there and they process the return, their return is larger than what the preparer lets them know they're looking to receive. While I have you on that topic, let's talk about filing statuses. We're going to talk about, there's 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualified widower. Single are individuals who are unwed. Even though they maintain their household, they are not filing anything other than single if it's just them on their tax return. For ages 24 and under, you may file single if you are a parent and you're still living in the residence of your parents. You may file single and you identify on that 1040 that you are a dependent on another return. You are simply filing the taxes that you made and the credit on your child if you have one, and you're claiming that child. However, notifying that, putting an indicator on that box lets the IRS know that the earned income and child tax credit for yourself is on your parents' return. You are simply getting the earned income and child tax credit on your child because you are still a dependent, especially if you are receiving medical insurance on the parents' return. Let's talk about married filing jointly. Married filing jointly is combining 2 incomes. Okay, two people that are wed. That can be male and female. That can be female and female. That can be male and male. Okay, what you're doing is combining the income. You are eligible to other things as far as the standard deduction. The standard deduction works through the filing status. Most people, when they file married filing separately, it is because one of the spouses has a debt. Filing together, you can file an inter-spouse form, right? That allows the earned income credit for the children that they have together on that return to be given to the person that doesn't have the debt on their Social Security number. The person that does have the debt on the spouse that does have the debt on their tax return is indicating, hey, I have, what I mean by that is, hey, they had a child before they were married. And just giving you an example, they had a child before they were married and they owe child support. So married filing jointly is an indicator, inter-spouse form is an indicator that one of the taxpayers has a debt and they want to take care of that responsibility with their portion of taxable dollars. Married filing separately, it requires you to still have that spouse's information on that tax return. It's their name, their birth date, and social security number, but not the income. Head of household is a single individual who has children on the return. And they are allowed a certain standard deduction for that filing status. Let's talk about qualifying widower. Qualifying widower is a filing status that you're eligible to claim 2 years while you are claiming the income on the spouse that has passed. You're inputting their information and their date of death, and you are processing the income for that individual, right? And you do this for 2 years, which signals to the IRS to signal to Social Security that the Social Security number is for a deceased person. That's how they monitor those. Selecting the right status can significantly affect your tax liability. If you go in the tax office with just your income and no children, you're going to be filed as a single individual, right? You're to share the information to process. I want to talk about the itemized deduction and claiming pets. A good friend of mine, she wasn't married at the time, and she's like, I want to claim my puppy. And me, I didn't do the research. I'm like, the puppy don't have a Social Security number. How you going to claim the puppy? But after I did my research, comes to find out that those with PTSD have support pets, and they are claimable on your itemized deduction form. Things like groomers and putting the chip to locate the dog if the dog is missing. Things of that nature are write-offable. Let's talk about the difference between a Schedule C and an 1120S form. 1120S form are for major corporations, so examples like a liquor store, and they have cost of goods sold. And when they get their wholesale deliveries, towards the end of the year, they have a trackable device that is used to scan each bottle, okay? And the quantity of how many is in that office. Incidents happen where bottles break, and you have casualty of lost or, goods that you didn't receive funds on that you report. Cost of goods sold reports the quantity in the beginning of the year and the quantity at the end of the year. Okay. Let's talk about payment abatement and offering compromise. Individuals who file and owe, you have the opportunity of going on the website, the IRS website, and making a payment. In the event you are low income and you can't afford to pay, or you want to make an offer in compromise, what that looks like, and I have a booklet form here from the IRS on the offer in compromise. That is a form 656. It gives you the information and what you need to know to do this. Typically, it's 20% of that debt, depending on the circumstances. It's important for you to talk to the IRS with your tax preparer and to deem you eligible for that program. Just as the federal has an offer in compromise, states do as well when you owe the state. You are able to make an offer in compromise on that debt when you owe. When you're on the phone, if you need more information and you haven't been given that information from your tax preparer, it's important for you as the taxpayer, while you're on that line, hey, send that booklet to me so I can look further into it and know about the portion that I'm paying, agreeing to pay. Okay. I also want to let you know that we have, when you've been filing taxes for a long time, you trust the tax preparer that's in front of you, the CPA as well. Let's talk about bank disclosures. Bank disclosures are used to secure the work that the preparer has done for you so that they are able to receive payments within filing the tax return. You are responsible for things such as bank fees, technology fees, e-filing fees, things of that nature. Bank disclosures are available and typically on each individual return as they're filed. When filing taxes, the IRS requires disclosures of all bank accounts, okay? Especially when connected to business activity. That's going back into the importance of utilizing your Cash App and your PayPal or electronic pay, period, and giving those statements to your preparer. Also, if you are using Bitcoin through those entities, you need to print the statement and give that to the preparer. Underreporting can lead to penalties, so be sure you account for every dollar that you've earned. Okay, let me note that alimony is no longer taxable for divorces finalized after 2018. The punitive damages from lawsuits, however, are generally taxable and must be included as income unless the damages are for physical injury or sickness. Let's talk about grants opportunities. Those we spoke about the solar panels, and that's a federal only. We're going to talk about clean energy credits. The solar panels, the clean energy credit. That is only on the federal level. On the state, you aren't given the credit on the state return. Typically, what you're able to do is certain states have green energy programs for individuals who have purchased and renovated their property, whether that's a vacation home, a rental home, or their personal home. And there are grants available for installation after you've installed the solar panels. That is usually on a 5695 form, and it's filed federally and processed. It's very beneficial for you to have that. The clean vehicle credit is on a 8936 form, and taxpayers may claim up to $7,500 for new vehicles and $4,000 for used vehicles. It's a refundable credit on the federal level. That's where you see things like at the Renaissance, they have the electronic charging stations for vehicles. There's a clean credit that goes along with that. Usually it covers 30% of the cost, and you are able to, any unused portion are able to carry forward to the next year, which you use to file. I'd like to give you an opportunity to know a couple of things going on. We have a fundraiser, WHPR, for New Year's Eve, where we will be raising money for the museum, and it will be on pay-per-view. So if you're interested in donating, look for that on New Year's Eve. It will be filmed live. It's important for you to understand the benefit of taxes and the credits that you claim. It's important for you to utilize your tax preparer so you make informed decisions on the income that you're making. It's not about hiding money or not taking care of the liabilities. It's about securing your foundation when you reach the age 60 plus and you're ready to retire. It's important for you to take advantage of the opportunities available under the current tax year. If you are an entrepreneur, that looks a lot different because there are a lot of state grants available to you and federal grants. The SBA.gov and Michigan has quite a few different grants for entrepreneurs where you are given money for the good deeds or, your proposals that you sent in for your business, and they help fund your startup. So those are very beneficial. Those who have not filed the PPP money that they received in the previous year, you're still eligible to file. There's still a lot of money out there from the people that have not filed and received their recovery rebate credit during the years that those were eligible. Each year, your 1040 adjusts. Maybe very similar, but it adjusts each year. And opening your folder, I'm more than hopeful that you all opened your folder to review your information and verify your identity. In the event you all have questions, you can always call 313-868-0342 and leave a message or voice your concerns, and I will get back to you all with that information. Developing and leveling your business, it requires you to utilize portals to update the information and deem you eligible for the programs in that state. There are a few opportunities I want to give you all in closing. There's a lot of programs going on. Oh, we spoke about ways to, before I give you this information, we spoke about ways for you to receive your refund. So there's a gold card, right, where you can have your refund put on a card. And that's going to come without your name on it. Your tax preparer is going to provide it for you, and your return deposit is going to go on a card. The entity that the card goes on typically gives you once your address is verified and the money is deposited, will give you a card with your name on it from their own bank. But that's what the Green Dot Visa card for deposits if you do not have a bank account on your return. Taxes may seem complex, but understanding your filing status, deductions, credits, and business expenses can save you money and stress. Keep good records. Plan ahead. And don't hesitate to use resources like the IRS transcripts, grants, and professional advice. The purpose of this is for me to give back to my community, helping them in the avenue that I am versatile in. It's important for you to take control of your taxes one step at a time. Take a look at what's given to you, whether it's electronically sent to your email or it is shared to you in the physical form. Review those files with research on your own to know what is on your tax return. And talk to your tax preparer. They should be able to thoroughly explain in detail the forms on your tax return. Also, I wanted to mention that The secretarial staff at the Wayne County Treasurer shared some information with me about mobile office units for paying your property taxes on your home. In the event the building is closed, they have a mobile unit, and I'm quite sure they'll be pulling up to events in and around Detroit area for you to pay your property taxes. I appreciate them for that. I want to thank the WHPR affiliates. Each of the other shows that are on the network, and I look forward to raising money for the foundation. I would look forward to raising money for the foundation this New Year's Eve. We'll be bringing in the new year raising money, and I'm grateful to be a part of that program. It's always a pleasure, and we shall meet again and very soon. Use this information to prepare you for this upcoming year, and I'm hopeful to do another reoccurring segment very soon to better prepare you in the December months leading into the year to file your tax return. As always, it's a pleasure, and I want you all to have an more than outstanding day. And I'm grateful to be a part of this radio station to deliver this informative piece.